Our next speaker is Graeme Johnston of Multinet Home Loans. And Graeme's been in the home loans industry since 2008 and has worked for the banks as well as opposition bond origination companies. And before that, he ran his own bridge finance business. And Graeme is now head of sales at Multinet Home Loans. And I look forward to hearing from Graeme. Thank you.
Thanks, Dave. Oh, it's quite hot up here. Okay, everyone, my name's Graeme Johnston. I head up the sales at Multinet. I've just got a little presentation here to go through with you. It's really just a quick 4-minute thing about how origination fits in with your industry, the real estate. Cool. All right, so if you can all see that, basically there's 3 bond originators in the country that have direct contracts with the banks. So it's the 4 main banks, ABSA, FNB, Nedbank, and Standard Bank. And in order to be to have direct contracts with the banks, you have to do over 1 billion a month in home loans. And that's why there are only 3 of us. And then underneath Uber and Betterbond, you'll see some other smaller players. What we call them is aggregators. All right, so those they don't have as much volume as us, so they don't have their own contracts. So they white label their products, but use one of us 3 to submit into the banks. And as you'll see up there in the top right-hand corner, a little orange block, SA Home Loans. So that's already a differentiating fact between us and the other 2 bond originators, is that we are the only bond originator with the SA Home Loan contract. All right, so if you do work with us, you'll earn referral commission on all that business as well. We do have other financial institutions that do give us bonds, like Itala, which is down in KZN, Investec, RMB, Sentinel, those kind of things as well. Okay, so actually, let me just start by saying, who has worked with Multinet before here? I'm just seeing if I'm talking to the, okay, to the converted already. So you might be in the audience and you might work for one of these brands here. So these brands all got together back in 98, I think it was, and they formed Uber. In those days it was called Mortgage SA. Okay. And in this case, it was the other way around. Betterbond started, and they thought, how can we generate enough bond income, guaranteed bond income every month from us? So they went and bought out real estate. So in this case here, Betterbond owns those or controls those real estate brands in the market. So between Uber and Betterbond, those are all theirs that they own and control. So if you're not one of those brands, that's who we want to align ourselves with. So we are known as the independent bond originator. As you can see here, Uber and Betterbond are not independent. They've got shareholding in other real estate brands, whereas we don't. And that's what makes us different. So in reality, what would happen is your client would come to you, the estate agent. You would give your deal to an Uber or Betterbond, if that's who you're with. They would submit it into the bank, and on registration, the bank pays money to Uber. And in fact, where does all that money go? To their partners. All right, so if you're an independent, why would you use one of those brands there? Because you're basically funding your opposition. Don't shoot me, I'm just the messenger. I've had death threats, so I'm not knocking those 2 companies. I work for Uber as well, they're great companies, but I'm just preaching to those independents. Okay, so these 2 companies got together as well and bought private property. So I went on to private property, I said, find me an estate agent in my area. And who do you think it gives me? Uber, Uber, Betterbond, Betterbond, Uber, Uber. All their brands. Okay, and it's great. I mean, if I owned the portal, I'd also put my own brands up there. But again, talking to the independents, again, why would you use one of those 2 if they're just promoting their own brands? So I just did some stats here on the market. As you can see, the independents, 62% of the market still. So, that's where we want to align ourselves with, are those agencies. So obviously you all have a choice. You can carry on using those other two brands. Or you can change. What's that advert? You can change the mainstay. All right, so just some information about Multinet, going back. So been around for 20 years. We're the only independent bond originator, as I said. We've got direct contracts with all the main banks and SA Home Loans. We have a national footprint. So especially for agencies where they've got branches all around the country, we've got consultants there that can service their branches. And as I said, we submit 1 billion a month in home loans, just to show you what size we are. So agents always ask me, how are you different to the others? And really our differentiating factor is that we are independent. So we're not owned by any real estate brand, and no real estate brand has a share in us either. So we have had some national contracts that we've signed with two brands, I think Keller Williams and EXP. And even then in Keller Williams, 5 years ago, they wanted to take a share in us, and we said no, because then there's a conflict of interest. So we didn't want to have shareholding or give away anything. I do believe that we pay the best commissions in the marketplace. If you chat to the EXP people around here, you will find out. So it's all about sharing the wealth. There's 4 directors in our company, so we don't have masses of real estate brands that want to take a shareholding every month out of the profits. Just the 4 of us, so we can share the wealth with our real estate partners. So what do we offer you as Multinet? We offer you a dedicated home loan consultant, okay? 5 years ago, when Sean Rodimer and I joined the company, we had no consultants. We had a whole lot of these little aggregators running along. So we went out there and changed our strategy. We said, let's get the best consultants in the market. So again, I got a big target on my back because I've been headhunting everyone from Uber and Betterbond, but I believe we have got the best consultants at the moment. We use a company called Lucid as a partner for credit checking. The nice thing about Lucid, it doesn't leave any footprint on the client's record. So, if you use Experian or TransUnion, those kind of companies, every time your client does a credit check, their score drops slightly. And if it's, a client where they're right on that cusp there, they don't have to provide a deposit, and then suddenly they do one more credit check, their score drops, and now they need a deposit. So it's very crucial in some cases. So we use this company, Lucid, and yeah, they're very good. So after the Lucid credit check, my consultants will do a pre-qual certificate just to make sure that what we're seeing is what the banks are going to see when we submit the bond. And for you guys too, I think it's just so important to do these pre-qual checks to stop wasting time and money taking buyers around and showing them stuff that they're not going to qualify for at the end of the day. And we know clients, they're not going to tell you the truth. That's basically what our our consent form looks like. So we obviously do need a consent form to do a credit check. That is Lucid. And that is what our pre-qual certificate looks like. So we'll send it to you, and you then know what price range to look at for this buyer. I just thought I'd throw in some industry stats. So as you can see here, all 4 banks are very aggressive at the moment. Okay, so they're all giving 106, 105, 110, 108%. So that's, full 100% bond plus costs. So this is a good sign for us, that they're coming to the party now, they're aggressive and they want market share. So here's the average purchase price, 1.2 million for normal buyers, and first-time buyers just over $1 million. Approved loan to value. So obviously what loan to value means is this is what the bank is willing to lend on that property. They're looking at the risk of the property, the area, and the client. So in most cases, they're wanting a 10% deposit. First-time buyers, 73% of our applications are first-time buyers, which is quite high. This was very interesting for me. Bonds taken up with own banks. And I'm sure you all come across this. You get a buyer, they say, listen, don't worry about me. I don't want to go to your bond originator. I'm special. I've got a private banker at Standard Bank or something, okay? Yes, they might be special, but if they are such a good client, the other banks want that business. They really do. And they're going to fight everything. And that's what my consultants do. They fight one bank off against the other. So even if your client really is adamant on not touching their Standard Bank private banker, fine, we'll go to the other 5 banks and see if we can get a better rate for them. At the end of the day, it's all you want, a better rate for your customer. Prime lending rate, sure, it's a horrible word. 11.75, eh? It's been around for too long now. It's like a bad smell. So I met with FNB on Monday, and they say 95% sure that September is going to be the day that they're going to drop the rate. 25 basis points probably, so let's hope it is. And then the interest rate currently at Prime Plus, 0.31. That's what most of our clients are getting on average at the moment. So gone are those days of Prime less 2 and things like that. This was quite interesting for me, the average age. So I could understand 39 years old for normal applicants, but for first-time buyers, 37 years old. So it's just showing, I think, that, you know, for the youngsters, it's hard to get into that market. They've got to come up with a deposit and then costs as well and things like that. And I think also their mentality is that they like to move around a lot and things too. They become more renters than owners initially. So yeah, that was very important fact there. So really, this is our value proposition to our real estate partners. We call it the power of one, where you're one consultant going to all 5 banks for you, okay? It's a no-brainer. It doesn't cost your client anything, and it's just less hassle for everyone involved. You've got one place to go to for a follow-up. You don't have to phone Nedbank and say, how's the deal doing? Then phone the Standard Bank and say, how's my deal? You phone one consultant, and you get an overall picture of where you are with that client. Okay, so I've got 3 of my top consultants here. Not only are they good looking, but they actually know what they're doing as well. So if you 3 just want to stand up there. So I've got Larima, Tumi, and Jeanette. Okay, so please use them. So you will find out if you deal with multi consultants, what I try and do is find those that have banking experience. And that is so important, I think, because they can see it from the inside. They know how the banks look at it. And a lot of them have got still contacts in the credit department. So I hear them every day phoning, and they say, well, we shouldn't be speaking to you and things like that. But they know how to package the deal properly, okay? And they know what the banks are looking at. And that's all it is. It's about converting the deals so that you guys make money. Because without the bond, you guys don't have the sale. So that's really important, I think. And that's it from me. Thanks very much.